Hello, good evening to you all, and you are welcome to the July 2023 syllabus walkthrough. My name is Bill. Most people know me as Prof, and I will be taking you through the syllabus walkthrough. I hope you can all hear me. So you can all post in the chat column below if you can hear me. If you can hear me, you should be seeing a blank screen. 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 Can you all see my screen? Can you hear me? Okay. So once again, when it comes to ICA, a lot of people underrate the syllabus. Most students who even sit the paper don't know the requirements of their syllabus. They don't know what is even supposed to go into their syllabus. Can you see me writing on the board? Okay, I'm now writing just so you can see me on the screen. Okay, so we are going to walk through the syllabus, but unfortunately I'm not going to walk through level 1. I'm going to focus on the key courses students have problems, and that is the one that I am going to walk you through. Is that okay? So if you would all permit me to go into the ICA syllabus, if you can see, I will first start with reporting because that's what a lot of people have problems with. I hope you can see my screen and you can hear me clearly and properly. You can give me a thumbs up or just say yes. So unfortunately, I'm not going to walk through level 1 because it will take so much time. Our focus will mainly be on level 2 and level 3. So I will bring linkages and things that you are supposed to know to pass the papers. I hope that is okay. I hope that is okay. Can you hear me? And is my screen visible to all of you? Okay. Now, when you look at level 1, which is the knowledge level, okay, you can see we first, let me just zoom this a little. You can see we have what? The entry requirements, and then we have various topics, right? Now, it says what? The entry requirements and exemptions are detailed in the entry requirements and exemptions syllabus of the syllabus, the exemption section of the syllabus. When you go to level 2, it says this is the application level. Right from knowledge, you come to application. If the screen is blurred, kindly click your options and go to advanced and put the video on 720 pixels so that it will be very clear for you. It is your own YouTube settings. That's why the screen may appear blurred. From my point, I can see it's pure HD. It's on 1080 pixels. Okay, so you can see Now, when you come to level 2, you see from level 1, which it says knowledge, that means in level 1, we don't require so much of application. We require you to have a theoretical mindset. Is that okay? So you are just going to know, you are just going to gather knowledge at level 1. But in level 2, it's application. Then from level 2, what comes? The professional level. So you see, when you come to progression, it says what? All of the knowledge level examinations needed to be passed or credited before embarking on the application program of study, right? So we have 6 courses here, with paper 2.1 being financial reporting. We have management accounting, audit and assurance, financial management, public sector accounting and finance, and principles of taxation being paper 2.6. Now, can you kindly write in the comment section for me which of the papers in level 2 are mostly filled by students a lot? Which of the papers are mostly filled by students a lot? So if I should put my highlight here, you realize that, yes, I'm still waiting. Which of the papers do people usually fail a lot? Or which of the papers have you heard people are failing a lot? MA and FR. Okay, I'll highlight that one. Management accounting, financial reporting. Is that all? FRMA. Okay, so far FRMA is getting a lot. Yes. PSA. Okay. Mostly, a lot of people also fail PSA though. All the subjects people fail, but the common ones are financial reporting and management accounting, as you were saying. Okay. Paul, Larry, we are actually talking about level 2, but you wrote CR. CR, yes, people fail a lot at level 3, but now we are just looking at level 2 courses. And I'll teach you the mind gap, or the gap people have in level 2. That is why they fail level 3. Is that okay? But for now, our focus is on level 2. Is that okay? So we have seen some of the courses people fail, but I don't I don't know why people didn't write financial management, or it's because people now they know there's no exemption in FM. A lot of people fail FM. A lot of people fail financial management. It's one paper that, because a lot of people had exemptions before, they are failing the strategic case study paper. And a lot of people don't have background in FM. Are you getting it? They just pick the papers randomly. The papers have been graded not by mistake, or not because they have just been written anyhow. You can see that it's a progression from 2.1 to 2.2 to 2.3, like that. So if you pick any paper randomly, sometimes you may have a problem. At the application level, which is level 2, is no problem. But let's say you see corporate reporting, for instance, at level 3 comes before advanced audit and assurance. But some students will go and pick advanced audit and assurance and straight pick maybe advanced taxation or case study, right? But then within audit and assurance, you need corporate reporting knowledge. You need financial reporting knowledge. Please, are we all following? So these are some of the things that's why it's progression. If you can look here, you can see there are some arrows, right? Guiding from level 2 application down to level 3 professional. You can see. Yes, meaning that it is what? It is a progression, right? It is a progression. So now let's go to level 3. I'll come there, we'll go into detail. Which of the papers are failed a lot at level 3? As for level 3, there is across board. The level 3 people, which papers have you personally failed that you are scared of? Which papers? Today I'm going to unlock some things for you, and then I'll teach you how to learn effectively. Yes, level 3. Which papers? Which papers? Advanced tax CR. People are writing CR. CR, strategic case study. Strategic case study. CR. Yes. CRSES by Abdul. CR, yes. It seems CR is getting the lead. Well, let me highlight it. Corporate reporting. Corporate reporting is having the lead here. Strategic case study is also following. Yes. Somebody mentioned advanced tax. Yes. But you know how many people usually fail advanced audit and assurance? It's heartbreaking. Trust me. A lot of people fail AAA because they don't get a good background when they are learning. Okay, they think it's theory, but it's actually practical. So they lose a lot there. So when it comes to level 3, the failure rate is high for all the papers, but the highest ones, you could say strategic case study has had the it's nerve-wracking. Let's make it red. Let's make corporate reporting also red as well. Yes, so we can say that these are the 2 main papers that people usually are afraid of, right, at level 3. And because of that fear also, they don't prepare well. You get the idea? Because of the fear, they don't prepare well. Anyway, let's dive into the syllabus. Let's dive into the syllabus. Now, I told you we are going to start right from level 2, and we are going to start from reporting. Okay, so there are some things that we need to look at so that you can know how you can use this syllabus to get a lot from your papers. I hope that sounds fair. So when we start, let's first start by looking at financial reporting. When you look at financial reporting, it says it is a progression from paper 1.1 financial accounting, meaning that if you do not know financial accounting, you are actually not supposed to sit this paper. Do you get what I'm trying to say? Now let's look at the outline content. It says what? In this model, accounting from the knowledge level is developed in the context of more complex events and transactions with a greater emphasis on compliance with regulations, including local and international accounting standards and generally accepted accounting practices. Now, when those who have done level 1 before progressing to level 2, they seem to find FR or financial reporting at least not quite difficult. They are very comfortable because even at ICA level 1, some standards are being done. The simple standards, like you do revenue, you do accounting policies, you do provisions, you do events after reporting date, you do some standard, you do PPE a lot. You even go into detail, just that you don't do impairment and other things, but the normal depreciation, provision for doubtful debt. So when it comes to single account preparation, those in level 1 have an upper hand. They understand the accounting principles. But immediately you take exemption, you are telling us that from your university you came from, you did accounting. And most people, you can all attest that the accounting that is done at the first degree level, most people don't even do accounting standards. Yes or no? You can answer me in the comment section. I'm live. Yes or no? Most people don't do accounting standards in university accounting, yet they take exemptions. Yes or no? They don't do detailed accounting. I hope that is understood. So because of that, when you take exemptions, right, what I always tell students to do, it shouldn't hurt you, right? Anytime you take an exemption, go back the previous levels, take particular courses which link to the courses in the next level you are coming to do, and look at the various topics that were there that you didn't know before you start the paper. That's the mistake we do. When we take exemptions, we think classes are enough to make us pass, so we snub whatever is in the syllabus and immediately start going to class. Very bad approach. Very, very bad approach. That is why you are failing, right? Go back to the accounting syllabus. If you are writing FR, there are some particular standards that are in the FR syllabus. Don't miss it, because those standards will always be coming in FR consistently. Let's go to the accounting syllabus itself. Let's see something. I want to show you something that you have been missing all the time. That is why still you are struggling with FR. If you are struggling with FR, let's go to financial accounting. Look at something. you say, on completion of this model, candidates will reach a competency level sufficient to be able to, one, explain the context, purpose, and qualitative characteristics of financial information, meaning the conceptual framework and regulatory framework is here. You can see you must be able to record transactions and events using double entry accounting system, and this is the main weakness of students at the advanced level, at corporate reporting level and FR level. They don't know double entry. That is why they struggle with FR. You see, these basics, we cannot see it. That is why they are struggling. Most people will not even mention it or tell people that this is their problem, all because they are coming to pay money. So they will not tell you. Yes, but this is the truth. Most of you don't know double entry, and you are even writing level 3. You don't know double entry. It's very bad. You get it? I'm telling you your weaknesses so that you strengthen them, so that you pass. Right? Then here it says preparing extended trial balance. Now, the preparation of trial balance is not really an issue at FR level, right? Because mostly a trial balance will be given you. But understanding the contents of the trial balance is what I expect you to know. Because sometimes, even in reporting questions, like single account questions, right? Sometimes you may be given a suspense account. In the financial reporting single account question, which we call what? Publication question, you have to know how to deal with it. Now, these principles, like preparing basic financial statement for incorporated and unincorporated entities, and interpretation, another issue which I'm very angry with students, is ratios. They know how to compute most ratios, they don't know how to interpret them, and they take this to level 3. Please, I hope you are listening to what I'm saying. You see, these are some basic ingredients that the examiner requires you. At level 1, interpretation is not that deep. When you get to level 2, it should be deeper than what you have in level 1. Are we okay? If you go to level 3, it should be deeper than what you did in level 2. But you look at level 3 financial statement. The guy has computed the ratio very well, and the guy is saying that return on capital employed has changed from 20% in 2001 to 30% in 2002. This shows that the entity has performed very well. Who told you? At this level, you are a senior financial executive. What kind of interpretation is this? You get the idea? Now look at the financial statements. What is it telling me? Forget about interpretation. Look at the numbers given you, right? If return on capital employed has changed, what caused it to change? Return on capital employed is what? A division of your profit before interest and tax over your capital employed. How much profit do what? Your investors get when they put 1 CD in your business, right? What profit is generated when you, for every 1 CD of capital that is employed in your business? Now, profit is a what? It's a deduction of revenue and cost, right? So if that is the case, if either of those things change, it affects your capital employed. Your capital structure too, if it changes, it affects your capital employed, right? So somebody can say that what? Capital employed might have increased because they paid off their debt. That is good. Revenue changed. They were expanding. A new competitor came into the market from the scenario, right? If you can't suggest, you say that what this might be due to, then you start looking at the changes. This might be due to increase in what? Revenue during the period because of the reduction in the what? Receivables collection date, right? Because of that, revenue is coming up. You are collecting money quickly, or you have extended the receivable period, so customers are buying more, right? So all these things, you need to be familiar with them. You need to be familiar with them. Remember, profit and efficiency gives you good performance, right? If you are efficient, you generate more profit. So performance ratios mostly center on efficiency and profitability, right? And the same way, if you're efficient, you become liquid. So there are also liquidity ratios as well. You get it? So ratios are something you need straight from level 1 down to level 3. Even in audit, we use it for analytical procedures. So because a lot of students have weaknesses around these areas, that is why they struggle. Me, I don't see it as something you should be struggling with. But you are not learning what you are supposed to learn. Trust me, it is not only class. Actually, the teacher is supposed to do only 30%, and you are supposed to do 70%. But we go further, we do more than that for you, and still students are not learning. The only complaints they'll make is the guy didn't teach us this. Oh, but what about you yourself? You decided to do the course, not the lecturer, right? So you have to take things very serious, right? So I told you I was going to show you something, right? So let's see. You see, we can see property, plant and equipment and depreciation at level 1, right? PPE. We can see revenue and income. Revenue from contract with customers. This is just the IAS 18 revenue, and even the new one, a bit of it. We can see intangible asset amortization, right? We can see a bit of capital structure and finance costs, which is required at your level. Partnership, no. But as we go, you are going to see some accounting standards, though they are not here. At the end of your syllabus, it tells you which areas or which standards are high priority, medium priority, and low priority. Look here. Most people have not even looked here. Look, Appendix A, it says technical knowledge required, accounting standards, part 1. It says the following table identifies where technical knowledge will be dealt with and the depth of treatment required. These appendices will be updated as and when new standards become effective. The depth of treatment is graded as follows. If you see level 3, it means you need a thorough knowledge with a solid understanding of the subject matter and some experience in the knowledge thereof. In practice, sufficient to exercise reasonable professional judgment in the application of the subject matter in those circumstances generally encountered in practice, and recognize the assistance of a specialist may be required, or recognize when the assistance of a specialist may be required. The level of knowledge is lower than that of a specialist, right? So this is the highest level of knowledge we require than somebody who is actually working, but this is the highest level we require. Now when you see level 2, it means that you need a working knowledge with broad understanding of the subject matter and a modicum of experience in application thereof that is sufficient to apply the subject matter in straightforward circumstances and identify issues requiring professional attention in more complex situations. When you see level 1, it means that this is a general knowledge with basic understanding of the subject matter and training in the application thereof sufficient to identify significant issues, evaluate their potential implications or impact, and recognize that additional work or advice may be required to be performed by a person technically competent in this area of expertise. This level of knowledge is significantly greater than that of a lay person, right? So you and the person who don't know so much, you have difference. You know a bit about it, right? So in simple terms, you are saying that we have low priority, medium priority, and high priority. This thing should help you a lot, but most people don't even know this in their syllabus, so they end up learning things they are not supposed to learn, right? So when you come here, the introduction to IFRS, when you come to financial accounting, that is level 1, you can see that what the requirement, there is nothing. You don't have to know about how the GAAP, generally accepted accounting principles, how it came to be, how they are formed, like the basics, right? The preface to the IFRS. When it comes to financial reporting, you need it a lot. That's why it is high priority. At corporate reporting, high priority. When you come to the conceptual framework at level 1, they don't go deep. But at FR level, you see it's high priority. I hope you can all see. So when you see 3, it is high priority. Don't ignore it. High priority here, high priority there. I hope everyone can see my screen. And you can hear me. Yes, so we've seen conceptual framework at final level, which is level 3. You see that you still require the conceptual framework. I see people saying that, oh, the conceptual framework is not in the syllabus, don't read it. Who said it's not in the syllabus? You need knowledge. This is your guide of what standards to learn and what standards not to learn at level 3. So look at the difference between the level 2 and the level 3. Now when you come to presentation of financial statement IAS 1, at all levels you require deep understanding of how financial statements are presented. Aggregation, all those concepts, you need to know about them. Assets, liabilities, equity, income, expenses. Is that okay? So you see, we've given a high priority. Please remember. Then when you come to inventories, you see at level 1, not so deep. You are just going to know the basic principles, like inventory is measured at lower of cost and NRV, not so, or fair value less cost to sell. Do some small adjustments. But at level 2, you may be doing inventory write downs, detailed ones, where you can even go and use absorption costing to calculate, get the cost figure, multiply by either NRV or the cost to arrive at what? The inventory figure which you are going to. They may even ask you to use a small, maybe 1 or 2 things. At level 1, they may ask you to do FIFO and AFCO, but at level 2 level, maybe some summary data, maybe 2-3 inventory, you may still be required to do that, right? A question like that came somewhere in 2017 in FR, and a lot of people could not answer it for 8 marks. Now you see, inventory, you require a thorough knowledge here, and at level 3, still thorough knowledge. That means inventory is a standard that you can't ignore at all. They can throw it to you in corporate reporting at any time. Then look at statement of cash flows all across board. At level 1, you need to know it very well, but not as deep as level 2 and level 3, right? You see, it's medium priority at level 1, high priority, high priority. When you come to accounting policies, changes in accounting estimate and errors, you see here, most standards here is not that deep, right? But it's deep enough than the 1. Medium priority, high priority, high priority. Okay, if I keep going like this, we are going to waste a lot of time. So let me speed up a little. Events after reporting date. It's not here, but it doesn't mean that when you are solving questions, you are not going to apply the knowledge. Okay, so basic is required here because the adjustments that they are going to give you are not year after year end adjustments. They are just basic ones. But this level, yes, you require this standard. So you see it's 3. Income taxes, level 2. Look, level 2 deferred tax. No, the deferred tax that they've been bringing to level 2, that people are running away, is even 1. See, the deferred tax people are running away from, where they bring it in published account, and even a bit of the console that students are running away from. The knowledge required for deferred tax in level 2 is just 1. But look at level 3, it's not even 2, it's 3. High priority. That means deferred tax is low priority, but that doesn't mean it's not coming. That means the level of examination of deferred tax is not deep, it's so small. That is why when you go, it's either they'll give you the current tax, they'll give you under and over provision, they'll give you the deferred tax movement. At level 2, you don't really compute the complete deferred tax on net assets. The basic one, they will just give you deferred tax on non-current assets like PPE, or yes, mostly PPE. Deferred tax is always on PPE, right? Deferred tax is always on PPE. So we compute deferred tax on PPE if it's level 2. But the one in level 3, it could be on anything. It could be on the other liabilities, provisions, and everything. Hello, please, I'm in class. I'll call you back. Is it understood? So corporate reporters don't mess with deferred tax. That is both income tax and then the deferred tax portion. Mostly is deferred tax that students have a problem with. That's why I'm mentioning that one. Now, when it comes to PPE, PPE is across board. You need to know. But at level 1, you don't go deep. You don't do this impairment side of PPE. The changes in accounting estimates, like when you change from method of depreciation, the deep depreciation, we don't do that. Then we come to revenue, IAS 18. You require thorough knowledge. between level 2 and 3. Employee benefits, you see, at level 2 you don't need big knowledge, okay, small knowledge just about what employee benefits are, the types, then short-term employee benefits where we use accrual accounting, okay. This is the one that you have to focus on if you are in level 2, but because it's low priority, some people don't even teach it. But please, I'm telling you, you need to know employee benefits, just the surface. Even if you don't read employee benefits at level 2, if it comes, you can do it. It's like the normal salary computation. Let me give you a typical example. So I hope my screen is visible though. If you can see my blackboard, just tell me yes so that I know you can see my blackboard. So let's say we tell you that an entity ABC also has accrued, or okay, let's say he accrues salaries of 100,000 each year, okay, 100,000 each year, and then during the year, okay, during the year, salaries paid was 70,000. Also, this is basic accounting. So what is the treatment? All you are going to do is that, you know, actually in your profit and loss, this is the salary you always accrue. That means you are going to debit salary expenses in your P&L, right? So debit salary expenses in your P&L, which is 100,000 going to your P&L every year. But the question here is, if 100,000 is going to your P&L every year, and then you have paid cash, so you credit to reduce your bank account, how much will go to the bank account? They've paid salary of 70,000 that year. That means, do we have a liability or we have an asset? Do we have a liability or we have an asset? Kindly post it in the chat column. Do we have a liability or an asset? A liability or asset? So we are supposed to pay 100,000. We are owing staff 100,000. We only pay 70,000 during the year. How are we owing staff, or staff are owing us? That's the question. Are we owing the staff, or the staff are owing us? That's the question. Are we owing the staff, or the staff are owing us? So you end up with what? Salary payable. Not so. Of how much? 30,000. Yes. I hope that is okay. So this is just basic employee benefits that you need, and this one you can use it to account for both short-term and long-term employee benefits. Okay, so at the FR level, this is not that detailed. Makes sense. So just something that you can deal with. Okay, so that's just by the way. Now let's go back. So we see that these are the standards. Now, when it comes to government grants at level 1, you don't need anything about government grants. But level 2 and level 3, detailed. Okay. Now, a lot of students have a problem mostly with government grants. Okay. They have a problem with government grants. They are able to work the government grants all right, but they are not able to get the liability properly, because they use their head. In government grants, remember, government grant is a liability. So far as government has given you the money and you meet the you are expected to meet the conditions. Government grant has 2 criteria, right? When there's reasonable assurance that you are going to comply with the condition, and there's reasonable assurance government is going to give you the grant. If that is the case, that means that you can what? You can recognize the grant. So only when the condition is met before you recognize it. Now, between level 2 and level 3, people still, They know the theory, they know the methods, but when it comes to applying the deferred approach, or the deferred income approach, they have a problem, right? So as usual, I always take an example to guide you, those doing reporting. So this one, just relax and wait till it gets to your course, right? This one I'm just talking about reporting, both financial reporting and corporate reporting. So we receive a grant. Look at something. We receive a grant. I'm still using the same 100,000. Okay. Let's say we receive a grant of 100,000 from government. Okay. The deferred approach says that if this is the grant, we are going to amortize this grant over the life of the asset. Let's say this grant was given for a particular asset. Okay, so let's say the cost of this asset was actually 500,000, but government gave us a grant of what, 100,000. So what happens if this asset is going to be used for 4 years? Okay, let me just make it 200,000 so that the figure looks good. So if you have 200,000, then the standard is saying that, okay, if I calculate my depreciation, I hope you can all see my screen. If I calculate my depreciation as 200,000 over 4 years, what would the figure be? 200,000 over 4 years. That's 50,000 per annum, no so? So that means every year we will charge an expense of 50,000 for depreciation. The same way you are going to amortize the grant. Okay, so the grant amortization. So we are going to amortize the grant and treat as other income. That means it is going to be amortized just like the depreciation and treated as income for every year. So this same 100,000 is going to be amortized over 4 years, and every year how much are we going to get? That's 25,000 per annum, right? Now this 25,000 is an income, which it means that if we realize this income every year, that means the condition has been met, and then you take it from your liability. Because if you don't meet the condition, then this whole thing is still a liability because you owe government because you have not met its condition. I hope that makes sense. So in simple terms, if I'm supposed to get a liability, okay, so I'm going to say this is my government grant deferred income. So deferred grant account. Okay, deferred grant account. So because now we use the statement form, I'm just going to use the statement instead of T account. So let me just put I'll break it here. Okay, so the first year, that's year 1, it's just 4 years. Year 1, my opening balance on the the grant account was 0. There was nothing inside. But then I received cash from government, right? Cash received. How much did I receive from government? I received 100,000 also. And immediately that year, how much goes to the profit and loss account? I say P&L, how much goes there? 25,000 goes there first year, right? So when I take this out, I'm left with my balance carried forward, which I know that out of this balance carried forward, 25,000 immediately goes what? Next year, not so? Non-current liability. Is that understood? Is that understood? When I go to year 2, the same thing happens. You bring your opening balance, which was the 75,000, and then immediately you know that the amortized 25,000 will go to your profit and loss account, and then you are left with what? Balance carried forward of what? 50,000, right? 75 minus 25, 50. But you know that 25,000 immediately will go to next year as a current liability. So you are left with 25,000 also spanning for more than 1 year, being a non-current liability. So you see the approach, very simple. So this is where if you go to your balance sheet, you are going to have 2 types. This will appear 2 times. When you come to your current liabilities, this will appear as what? Deferred grant or deferred income, appearing year 1, year 2, 25,000 and 25,000, right? But when you go to non-current liabilities, it is also going to appear as deferred income. Here, the first year it will be 50,000, and the next year 25,000. Not so. That is it. And the final year to be nil. You get the idea. But a lot of people have problem doing this. They do it in their head. But it is better you open an account to get what? Your full mark. To get your full mark. I hope that is well understood. Have I explained it to your understanding? Who has a question? You can kindly post your question in the chat section for me. You can kindly post your question in the chat section for me before we move. Is it well understood? I'm still waiting for your questions. Now from there, please, you can still ask your questions. From there, we come to the effect of changes in foreign exchange rates. Okay. Now, this standard it is of two forms. Okay. We have what we call the standard deals with foreign transactions and foreign operations. And the foreign operations part is for foreign subsidiaries, which we don't do in FR. So you see that in FR, you only do foreign transactions. And even that one is not very deep. It's just a surface. So that one is 2, medium priority. But when you come to corporate reporting, it's 3, meaning you'll be doing both, which is foreign transactions and foreign operations. Is that understood? Any question? Please, I'm still waiting for your questions. I'm still waiting for your questions. Now, the list goes on and on, right? But I hope this is a good guide I've given you. So right now, if you have a copy of the ICA syllabus, go to the back of the syllabus. Make sure you know which standards are high priority. Put your focus on it. Know them very well. And then the ones that are medium and low priority, you just read over them. Are you getting it? Just that if you go, you can do most of the things that you can do. I hope that is okay. Please, did everybody understand? So make sure you actually go to the back of the syllabus and know this. You see, ICA actually wants you to pass. So you see, they've given you this document here to help you to pass, right? So that is it for the standards that you have to know. I will not talk about standards again, but then when we go back to the syllabus, I told you I was looking at reporting first. I'll finish with the reporting right now. Then we move to management accounting. Then I come and talk a bit about other ones. Then we start looking at other advanced stuff. Where is it? Forgive me if I've not hit on your subject yet. I see a lot of people are not patient. They want, if it's man accounting, they want man accounting, but take your time. Okay, so let's first see. We have talked a bit about standard, so I'm not going to talk about standards here. Now, when you come to financial reporting, the syllabus reference A talks about demonstrating an understanding of the international regulatory, legal, and ethical frameworks, the International Accounting Standards Board, Conceptual framework for financial reporting, and their practical implications for financial reporting. Okay, so here you see it is even giving us the questions. The syllabus is the questions they have been asking you in exam. You just have to open your eye to see that it is actually the questions they are asking you. So if you can see, it is telling us to identify the role of the IASB and describe the standard setting process. You see, this alone is a question. Question 1. Identify the role of the IASB and describe the standard setting process. These are even 2 questions. The role of the IASB, 1 question. Describe the standard setting process, 1 question. When I wrote corporate reporting, this question came, right? And this thing, I used to have a mnemonic that I used to use. I've forgotten, but a committee will be set up, all that thing, an exposure draft to be sent, a discussion paper, it will go for public comment, come back, an exposure draft, all these things, then the final IFRS. I get to make sure you know these things. Even at the corporate reporting level, it is still required. Okay, so here they are telling you to know the regulatory body, the IASB, International Accounting Standard Board, the International Financial Reporting Interpretations Committee, the Advisory Council. Then they've added new ones. In the old syllabus, we didn't have Global Preparers Forum. We did have Financial Crisis Advisory Group. I get it. You see the standard setting process. That's what I was telling you. So a question can come this way. Identify the role of, then they give you the name of the regulatory body that they are talking about. Is that okay? I'm not seeing people with any questions under the live chat. Okay, so from there we have the benefits and drawback of global harmonization. Is something every student should read. Very, very important to know the history and rationale of harmonization, the role of the IASB, the Financial Accounting Standard Board from the US. In the US, they use financial accounting standards. So you have the FASB and the Memorandum of Understanding, the timetable for harmonization. But most of the time, they are going to ask you the advantages and disadvantages of harmonization, right? In your FR exam. Then when it comes to issues of ethics, we have the ethical framework. Okay, so know the fundamental principles, IFA code of ethics, and the impact of Enron case. Just read about the Enron case, what happened, how it collapsed, and the rest, right? But IFA code of ethics at your level is not that detailed, but I've realized that the FR questions that come nowadays are practical. Okay, they give you a scenario where somebody is employed by his uncle, and as he's employed by his uncle, this and this and this is happening. Okay, so you just have to know the principles. You just have to know the principles of ethics, the fundamental principles: integrity, objectivity, confidentiality, competence and due care, and professional behavior. But you should note that for exam purposes and even in real life, a breach of any of the fundamental principles is a breach in professional behavior. So anytime you get a question, right, that is practical, you ask yourself, is there something wrong? If there's something wrong, what did the person do wrong? Is it the right way to do the thing? No. If it is not the right way, that means the person has done something wrong, right? Either intentionally or unintentionally. If it is intentional, then the person has breached integrity. If you do something intentional, doesn't mean you are honest or you are not honest. It means you are not being honest, and not being honest means you've breached integrity. Are you getting it? Have you been objective? No, you are not being objective. So if you are not being objective, it means what? You've breached objectivity. What will cause the person to breach integrity and objectivity? Note, integrity and objectivity together means independent. If the person is not independent, then there are threats that are causing the person not to comply with integrity and objectivity. That is where you start looking at the threats like self-interest, self-review, advocacy, intimidation, and what? Familiarity and the rest. But most of the time, because you guys are accountants, and here we are looking at it from an accounting setting and not an auditing setting, the key threat that people of this occupation or this practice usually find, practicing accountants, or let's say working accountants, are mostly management pressure, where your managers will be pressuring you, some form of intimidation to do something you are not prepared to do. Mostly ethical scenarios in the exam come from that phase. Are we okay? Is that fair? So you should be ready to deal with these issues, especially in corporate reporting. At FR level, these same issues apply. So every time you get a ethics question, ask yourself, what is the issue? Why is it an issue? What are the actions I can do? So at FR level, mostly they don't ask for safeguards, but at corporate reporting level, they ask you for safeguards. And anytime you are confused, just write seek legal advice, right? It's the best safeguard you can apply. That is when you are stuck. Okay, so can we go? The next one says discuss and apply the requirements of IASB's conceptual framework. So this is where you have to look at the users of financial statement, their information needs, components of a financial statement, which is the financial statement themselves plus the notes, assumptions underlying the preparation of financial statements. So just the contents of the framework, right? And you must know the framework. Then the concept of capital and capital maintenance. Listen, a lot of students ignore this at FR level. And even at the final level, I'm telling you, don't forget, capital maintenance is examinable. It has been examined before. I think somewhere, I don't remember, was it 2016? Capital maintenance, it seems people read, they don't understand it. Okay, we have financial capital maintenance and operating capital maintenance. In simple terms, how do you view profit? So this is the view of profit from two different perspectives, right? So somebody is saying that, okay, profits will be defined or profit will be earned when your owners, okay, wealth changes from what they put in the beginning, has changed from what came in at the end, then profit has been earned so far as they didn't contribute any additional capital. Does that make sense? Does that make sense? So in simple terms, that's what financial capital maintenance means. It's a definition of profit. So in simple terms, we are saying that, okay, if, please, I hope you can hear me. I don't know whether I've gone off or you can still see my screen. Can you hear me? Kindly post it under the chat column. Let me know. Okay, so it is saying that if at the start of the year the owner's wealth was worth 100,000 also, and at the end of the year the owner's wealth, which is the net asset, was worth, that's 31st December 2020, right? The owner's wealth was worth 500,000 and there was no contribution of capital. Okay, there was no contribution of capital. There were no drawings. Not so. Then it means that the increase in this capital was purely due to profit, right? Does that make sense? That means extra profit of 400,000 came to add up. And this is what we call financial capital maintenance in simple terms, right? Capital maintenance. I hope that is understood. Make sure you read capital maintenance. When you read it, you won't understand. I know. When I read it way back, I didn't understand. But it is actually different schools of thought. Two different schools of thought on profit. The next one talks about operating capital maintenance. That talks about how your operating capacity also, when it changes, it means you are operating efficiently and it generates profit. Okay, so it is just how capital is maintained to generate profit in simple terms. I hope that makes sense. Okay, so let's go back to the syllabus. So we've seen that then when it comes to accounting standards, I gave you the schedule at the back of way, so I'm not going to go into accounting standards, right? Now it says single entity financial statement in accordance with the IFRS. Now the financial reporting exam is standard pack. So if you don't know the standards, you cannot even do the reporting, right? If you don't know the standards, you can't solve the questions. So here everything from statement of P&L and other comprehensive income, changes in equity, statement of financial position, and statement of cash flows can be asked. Now, one issue I want you to know is this. Now, when it comes to financial reporting, okay, the single publication or the single account publications you are going to get will mostly stem from one, preparing financial statement, right? The first one is the type where you preparation of P&L, balance sheet, and statement of changes in equity. Okay, statement of financial position. There's a common type. The second type is what we call advanced published account. Okay, advanced published account. So this advanced published account, please those writing, if I put it down to help you, the advanced published account is what we call redrafting. Okay, meaning that the financial statement has been given, there's something wrong. It's either it has been prepared by a trainee or it has been prepared by somebody who doesn't have the knowledge, and you have to correct mistakes and do the proper thing. The third one is where you are going to prepare statement of cash flows, right? Statement of cash flows. So this one usually features in question 3 a lot. Okay, so it's either of these three that you should mostly be looking out for. This one is the common recurring type. Okay, it's mostly recurring. So always prepare yourself for this one. By having knowledge in this one, you can actually have knowledge in all these ones. This is the most underrated. A lot of students underrate cash flows, and most students don't like cash flows, but cash flow is the easiest of the three. Cash flow is the easiest of the three. Just learn cash flows, learn easy methods. There are easy methods that you can use to always get roughly 18 out of 20 for cash flow statements all the time. And at this level, they mark per tick, right? So if it's 20 marks, we are saying that how many ticks will give you 20 marks, right? So you mark per tick. So the more ticks you have here, and mostly the ticks will come from the workings that you do, right? So here the ticks are very important, and you should do the right thing, not by just duplicating your workings to get ticks. Is very wrong. I hope that is okay. I hope this little introduction has helped. Okay, so those doing FR, those are the things that I want you to look at. Now, you see they bring disclosure notes. Most questions will tell you to ignore disclosure notes, but not all the time. Sometimes, listen, they may tell you to prepare disclosure notes. Let me tell you how you do. You see the workings that you are doing, they are disclosure notes actually. But to make them proper disclosure notes, after doing the workings, you need to write a caveat under. You need to write under it, right? Let's say you've done NRV. Let's say there's an inventory working. You are going to say that, okay, according to IAS 2, then inventory, then you underline. Then you say according to IAS 2, inventory is carried at the lower of cost and NRV. Now NRV is known as fair value less cost to sell, and this is the note or the disclosure that has been given. You get it. You just add some spice to it to turn the working into a disclosure. That is all. So mostly when I'm doing financial statement preparation, the notes and the workings, I write it as notes, schedules, and disclosures. You get it. That is all. So that is what you have to know. Then when it comes to console, that is what people have been waiting for. Now this console, I'm coming to talk about it from the perspective, because there's no time, I'll talk about it from the perspective of corporate reporting and from the perspective of FR. At FR level, you are always going to have a single subsidiary, right? But note, now they require what? Deep understanding of IFRS 10, IFRS 3 business combinations. There are some things that if you are doing console that you don't know, you are supposed to go and sit down, learn again, and come and do it. People don't understand the concept of groups. Associate is not part of the group. Group is based on the substance over form concept, where the two have become a single entity. So any transaction that happens between them must be eliminated. That's the rule. Any transaction that happens between them must be eliminated. Is it understood? That is the whole rule. Now, a lot of people find console difficult because they don't get the concept, and the workings look too cumbersome. When there's depreciation here, you have to divide. You have to know whether it's fair value adjustment. Please, that is what the syllabus provides. That is what you have to lose. Are you getting it? That is what you have to lose. Learn it. That's the best advice I can give you. Learn them, right? There are simpler ways. Check if your method, okay, sometimes the examiners are not going to tell you, but I'm telling you this. Check if your method is the best method. Ask your tutor if the method you are using is the best method that can fetch you the maximum marks, right? I know a lot of people are using all sort of different ways of doing console, but look for the latest roll forward method that will score you the marks that you need. Don't just adopt any method that you've gone to learn or they've taught you in class. Okay, ask and know the better method of doing console so that you don't mess up, because some of the methods people use are the reason why they are failing console, but nobody will tell you. If the person marking does not know the method you are using, like the people who are fond of watching videos from SEMA, ACCA and other places, some of the ACCA videos, the methods are good, some are also using other methods. What if you do it and then it's not being understood? You can get the answers correct, but what about your workings? Maybe your workings, how you even did them, we don't understand how you got them. So Are we just going to rely on your final figures, or you are going to rely on how you came about them? I hope what I'm saying makes sense. I hope what I'm saying makes sense. Is it well understood? So please take the time, know the method that you are actually what applying for consolidation. I'm talking to both those doing corporate reporting and those doing financial reporting. Okay, so that is definitely what I'm going to talk about. But when you look at it very well, you have a theoretical framework. Okay, console is 25 marks, but most of the time they'll bring a 20 mark calculation and bring a 5-mark theory, and the 5-mark theory will mostly come from the theoretical side, like when are you not supposed to consolidate a subsidiary, what factors evidence significant influence, when don't you prepare consolidated financial statement, the definition of control versus significant influence. Are you getting theories around that area? Goodwill, what is goodwill? Are you getting explain goodwill? How does goodwill, should goodwill be amortized? Can goodwill impairment be reversed? These are some questions that always they are going to ask you, and these questions mostly they appear in your question 5. Okay, both those doing corporate reporting and financial reporting, don't joke with console theory. It comes most of the time. So these are the areas. The final area is the analysis and interpretation of financial statement. Now you see the syllabus made reference to 4 relevant stakeholders. That means that you can prepare ratios for particular stakeholders, and this is what students don't like. So there are categories of ratio questions that ICA can ask you. Are you getting it? So I'm going to put them here. So the first type 1, is where you are giving financial statement and then you choose your own ratios. You choose your own ratios. So choosing your own ratios, the requirement will mostly be like analyze performance and position of so and so company. Okay, this is the first type. Type 2, the same way financial statements will be given, but examiner gives specific ratios. Okay, the examiner gives specific ratios. This one to students like it because the ratios that come are mostly simple. What if you go and they ask you how do you calculate a particular ratio which you don't know about? What do you do? That is the issue there. Okay, so you go and they ask you what is times end, calculate times end. A lot of people don't know times end is the same as interest cover. So you go, you see this, you ignore, and sometimes you calculate the ratio and it looks like it has deviated, right? So you go and the examiner is giving you gearing, and the gearing the examiner gave, look at it, the gearing the examiner gave was like 20%, right? But the gearing you are getting is 90%. That should tell you that this variance is so huge. Maybe you are using a different formula from what the examiner is requiring, right? These are some things you need to really understand. Are we getting it? This is type 2. Type 3 is where it's not mostly common, but it can come. Type 3 is where ratios have already been computed. All you have to do as a student is interpret. Okay, so this is type 3. So you have type 1, they give you the financial statement, you choose your own ratios to analyze performance and position. This one to financial statement you are giving specific ratios. Sometimes it can come with an industry average, sometimes it comes with a competitor, right? Then the final one is where financial statements are given for a particular period or with an industry average, whatever, and they'll tell you to prepare specific ratios for a particular investor. Are you getting it? So they'll tell you that a big supplier has contacted you and he wants to see your performance, right? So compute ratios that will suit that supplier. So a supplier, what ratios will a supplier be interested in? Do you understand? So preparing for relevant stakeholders is what we are talking about. Apart from that, those doing corporate reporting, most of the time you may be required to do alternative analysis, sectorial analysis, meaning that it will not come just like financial statement, it can come as a sector. So somebody who has multiple branches, they'll give you performance in branch A, branch B, branch C. They can give you performance over a quarter, right? They can give you any sort of data. All you have to do is draw conclusions, right? Draw inferences from the data you have been given and interpret. Mostly give you some footnotes, so the footnotes becomes a guide that you use to analyze the financial position and performance of whatever information. They could give you budget and actual information, they could give you any information at all. Are you getting it? Any information at all, you should be ready to deal with it, as I was telling you. And students also have a bad approach when it comes to interpreting financial statements in financial reporting. They do all the calculations before they start interpreting. It's a very bad approach. It's a very bad approach. If you want to analyze liquidity, at least you compute 2 liquidity ratios, you move to liquidity, you comment. You calculate maybe profitability, you do 2 or 3 profitability, you move, you comment. So by the time you are done with all the ratios, you've commented on almost all of them. You are done. Because I've realized that a lot of people spend time when it comes to ratios in the exam. Some people spend almost half an hour. Are you getting it? Half an hour. Those are those who are very smart. Are you getting it? But the guys who are slow, 1 hour, 1 hour 20 minutes, 1 hour 15 minutes, then what time will you get to do your other questions? I beg you. So that was about reporting. It's time for questions. It's time for questions, so you can ask your questions. Then we can you can ask your questions, then we can move. Can ask your questions, then we can move. Please, it's time for questions before we move to other subjects. It's time for questions. So reporting, about the reporting. Hey, nobody has a question for me? Or is it that you can't hear me? Can you hear me? Just give me a thumbs up or just say a yes if you can hear me. So then if you can hear me, ask questions, please. I need questions. Okay, so the next phase of this walkthrough is, which one should we do next? I just need suggestions so that we can move quickly. Management accounting. Now, this is a progression from introduction to management accounting in level 1. Now, when it comes to management accounting, we can see the syllabus reference A talking about contemporary approaches to management accounting with 15 marks. With okay, somebody asked a question. He said, in fact, the notes attached to the ratio calculations are always the problem. If you can say something on that. Yes, these are some of the things I need. Just listening to me, I wouldn't know where your problems are. Right? Now, the thing is that when notes are given, they are there to throw more light on what is happening. Is that okay? When notes are given, they are there to throw more light on what is happening. Now, why am I saying this? Now, if people who have done corporate strategic case study know about this, right? Where they are giving a whole passage and then a financial statement is given, then you have to pick the interpretation from the passage. So mostly the notes that will be given will throw more light on what is happening. For instance, if look at this, if revenue has been given and during in the notes they tell you that a recent, look at this, I think that's a good question. So please, those who are waiting for him, may pardon me, let me help this guy out. So let's say you have 2022, you have 2021 here, not so. So let's just say we have retail revenue, not so. Retail revenue 10 million, not so. Then we have what? 1 million. Look at the drop. Then somewhere in the notes, additional information, they tell us that what? The retail revenue is for the 4 retail stores. Are you getting it? It's for the 4 retail stores. Then we have store 1. Okay, store 1 having 10 million profit. You have store 2 having 8 million profit. Okay, you have store 3 having 2 million profit, and you have store 4 with loss of 19 million. Now they've given you this additional information. Then they said a recent competitor came into the industry with new stuff or new eco-friendly goods or something, right? You have this. What is it telling you? What is this telling you? Paul, you are the one who asked the question. What is this telling you? Now see, if you are interpreting this, what can you see about revenue growth? What can we say about revenue growth? We can calculate the percentage change in revenue, right? To tell us that, okay, revenue has changed. We know percentage change is what? New minus old. All over old times what? 100, right? We know this. So somebody should do the calculation quickly for me. So in simple terms, revenue has now become 1 million. So revenue has dropped by 90%, not so? It has dropped by 90%. Not so. Why? It seems all the retail stores were performing well. Can you see? So that's what it's like. The notes are always additional information. So you could see that these retail these retail stores, you cannot attest that these retail stores were doing well, right? But what happened? Who can tell me what happened? Please, quickly, so that we can move to other subjects. What actually happened? Yes, please, quickly. This one is not only in FR or corporate reporting. It happens to all papers, even in audit. They give you advanced information. Hello, what is happening? Oh, kindly post in the chat column. Let's share ideas. It's like they only wait when I'm going through. Ask questions. Yes, I'm now asking you what is happening here. Look at the stores. Store 1 was making 10 million profit in 2022. Store 2 made 8 million profit. Store 3 made 2 million profit. Store 4 made a loss of 19 million. So what happened? It's obvious. That's what I'm asking. What happened? Yes? Nobody is saying anything. What happened? Is it that the thing is gone off or you can't hear me? Can you hear me though? Yes. The revenue of the stores in the sum was reduced by the loss in store 4. Right? This is an aid to interpretation, but it doesn't end there. What could have caused store 4 to make a loss? This is where the proper interpretation is. So this might be due to, already the note is giving you further information that what a recent competitor came into the industry. Maybe it's a multinational, and he cited one of his stores or his branches where store 4 was located. So a lot of customers ran away, or they ran to the competitor. You see how we interpret. So sometimes additional information given in the scenario is to help you. Paul, Larry, is your question answered? So sometimes they may even give you further information than this. This one, I just wanted something which is more. Yes, so Moses is saying that the loss from store 4 depleted the revenue. Do you understand? Yes. So that is it. But it shouldn't end there. Tell us why all of the stores are having this and store 4 is having a loss. And would it be appropriate? So you say you would recommend to management. Are you getting it? People, I don't see this in analysis. People have to do this. Recommending to management what should be done, right? In this case, ethical issues come in, even in ratios. You see, most of the time they may be tempted not to bring store 4. Do you all agree with me? They may be tempted not to bring store 4 so that it will be like 10 million to 20 million, 100% increase in profit. Yay! But this guy has done the right thing, no? Has he not done the right thing? Will he show a good picture to the shareholders and other stakeholders? Yes or no? Would he show a good picture to the other stakeholders? Yes or no? Yes or no? And what should be the appropriate thing that needs to be done? Somebody said he has done the right thing, but it will not show a good picture. So assuming this company was going to list on the stock exchange in 2022, would this be a better thing to do? They will by all means try to manipulate the accounts. Do you all agree? Do you all agree? Yes. So with that being understood, we can move on to management accounting. So with management accounting, I won't go into the syllabus. I will break it down in a better way for students to make use. If you look at it as contemporary approaches to management accounting, then you ignore some areas which are actually in your syllabus. Okay, so I am going to break management accounting into what you are actually supposed to know, so that you can do it and do it well. Okay, so from henceforth, I'm not going back to the syllabus. I'll just be on the blackboard so that we can cover quickly, right? So the final thing I'll be looking at will be strategic case study. Thanks, Larry. You're also welcome. Are you okay? The final thing we'll be looking at is strategic case study, where I will be going through ICA's own material, right? ICA's own material on strategic case study and what you have to know. But with that one, we'll go off and come back again. Strategic case study will be the last thing I'll look at, because that one will be a long session. So I think I will start strategic case study at 8 p.m. Okay, so this live session will be ended and strategic case study will start at 8 p.m. So I'm going to finish up with all the other subjects, and then strategic case study will be the last thing I'll talk about, because that one is entailing. I want to give people strategies. I want to be writing. I want to show people things that they have to do to pass strategic case study first attempt. Management accounting too, I'll talk a lot, because people fail a lot. Are you getting it? So these are the things that I will be discussing. So I'm telling you, if you are waiting for strategic case study, I'll start it at 8. So if you are only here for strategic case study and hold on, go through man accounting, then you can go off, because there are some things in management accounting you need to know a lot for strategic case study, which is decision making and investment appraisal. Very, very, very important. Is that okay? So you can hang tight. Okay, now what are the key topics that people find, those who are writing management accounting, what are the key topics that you find a problem in your exam? Please, this should be personal. Don't suggest for somebody. Put it in the column I'm waiting in the live chat. What are the key problems people face when it comes to management accounting? Key problems people face when it comes to management accounting. Variance, yes, variance analysis. A lot of people don't like variance, but variance is the easiest part of the whole syllabus. The easiest. Yes, Michael. Yes, another topic. I want topics people find big problems. Yes.
A new SMS from Mobile Money.
Variance analysis, is that all? So areas of problem for management accounting. Areas of difficulty. Okay. So we first have students facing problem in variance analysis. Okay, and standard costing. So the reason why people face problems in variance analysis is because they don't know standard costing. That is why they face problem. If you know standard costing, the variance analysis is the easiest part of the syllabus. 2. Decision making techniques. Yes, if you don't know relevant costing, then you have a problem with decision making. So yes, relevant costing. So knowing which costs are relevant, which revenues are relevant, which cash flows are relevant, and so on and so forth. Yes, I'm still waiting. So far I've got only two areas which are weaknesses of students from the same person. Yes, the rest you are not saying anything. Michael, you are the same person giving me the areas. Activity based costing. ABC is even the easiest though. Okay, but it's an area of difficulty just because people don't know how to absorb overhead. Okay, so you see, everything you give, I give you the reason why people don't get it. Okay, so people don't get ABC because they don't understand the concept of absorption. Okay, any other area? any other area people feel is difficult, you just give me. After that, I'm going to give you a strategy for management accounting. If you are writing management accounting, it will become literally very easy for you to pass without struggling. Is that okay? So please, somebody has mentioned 3. What about the rest? It's like, is it that people are not doing management accounting? Are people not doing management accounting? Okay, maybe those doing management accounting, they are off chilling somewhere. No problem. So, other areas which people face problems. Let me write it myself, right? When they bring multiple product cost volume profit analysis. Problem, because people lack understanding of marginal costing and weighted average contribution. Okay, a lot of people also have problem in throughput and limiting factor. Another major area, transfer pricing. It seems students don't get it at all. Transfer pricing, but it's like they don't even understand. But transfer pricing is too easy. They will always, I see, or not go detailed. You get it? There are detailed parts of transfer pricing. They are just on the surface. They don't want to go too much into detail, and still people have problems with that. Okay, then budgets. Okay, the king itself, budgeting. Now, when it comes to budget, preparing master budgets, preparing cash budgets are mostly an issue for students. And when it comes to functional budgets, the only time when it gives problem to students is where they bring certainty equivalents. They bring percentages where you have to work back or gross up, right? There's a loss. Grossing up. This is where they bring standard information. When they bring standard information, students usually struggle, where a percentage has to give you another percentage. Maybe sales is expected to grow by 20%, and out of the sales, 30% of the sales for next month is supposed to be closing stock. When they bring things like that, it confuses students a lot, right? But then when you look at the management accounting syllabus, I'm going to guide you. When you look at the management accounting syllabus, let's focus on areas that can make up our maximum marks, right? So when you look at this, let me give you some 65 marks. I always tell people I always focus on the 65 marks that can give you your marks. We have contemporary approaches to management accounting, 15. We have what? Management decision making techniques, which is variance analysis, okay? That's also 15. When you add it, how many marks do you have? That's 30. You have long-term decision making techniques, 15. How many marks do you have? That's 45, right? Then we add performance evaluation, 20. That is how many marks? 65. Now this is my 65 marks ultimate management accounting passing techniques. Now if you know these 65 marks, you shouldn't fail management accounting. Why? It doesn't mean you are going to ignore short-term decision making and budgeting. I'm telling you that these two areas are the areas that are time wasting in the exam paper, right? When I say they are time wasting, it means that if you start your question with short-term decision making or budgeting, you are bound to fail, because most questions from budgeting and short-term decision making are very long and they are there to waste your time. Is it understood? Is it understood? So, in simple terms, I always tell you there's a simple way to crack. I should have given you the 60 marks for FR and corporate reporting. After this, I'll just write it down. You copy, okay? So, this is the syllabus I want you to adopt. The focus areas are the 65 marks, right? So, I said focus is 65 marks. So, this 65 marks is your focus, plus the 35 marks, what do we call it? The 35 The 35 marks, let me call it what? So. Do you understand? You can't say so, you understand, right? That one, you play around. Play around with them. That play around doesn't mean that you are taking easy marks first, right? That means that when you go to the exam, because of time, focus on taking easy marks first from this, right? If your question comes, then fine, but do it last. These areas, do them last. Do them last because they mostly waste your time. I get it. If CVP will come, it will not come so easy. If a single product, there will be a lot of options. Proposal 1, proposal 2, proposal 3, proposal 4. You have to implement all the proposals before you see the profitable proposal. Assuming you did that as your question 1, which took you about 2 hours to complete. My brother, my sister, when are you going to do question 2, 3, 4, and 5? Please, I hope what I'm saying makes sense. So this is your focus, 65 marks, right? Which begins with what? I will call it the intro. I will break it down into intro to management accounting. Okay. 2, models of evaluation. So the contemporary approaches, no? That's what I'm breaking down for you. And 3, modern costing systems. Modern costing systems, right? So these are what we call the contemporary approaches. So this 3 is 15 marks. When you focus on this 3, your chances of passing are high. So models of evaluation are still performance measurement mechanisms, right? But however, these performance measurement mechanisms, they are merged with the costing, right? So under this is question 1. I'm saying this is question 1, right? 15 marks. I'm just putting here 15. So let me put this off. Now when it comes to 2, the next thing I want you to look at is performance measurement or performance management, which is the main reason why you are doing this course. Now performance management is 20 marks. And performance management, we will first start by looking at what? Financial performance indicators and non-financial performance indicators, right? That's the first part of performance management I want you to look at. Then I want you to look at divisional performance. Divisional performance, that's where your focus will be on the computation of RI, ROI, and sister EVA, okay? As well as the use of contribution to sales ratio. Contribution to sales ratio for performance measurement, right? From there, the next thing you are to consider yourself with is accounting ratios, right? Which will be part of financial performance and non-financial performance. But accounting ratios can be on their own together with sector performance. Then transfer pricing. Okay, so these are mostly the areas you have to consider. Then other performance influences, other influences in performance. So where you are looking at influence of government interference, other principles. Then service industries, performance in service. Remember SHIP. Okay, that's one of the principles that make what services difficult to measure in terms of performance, right? So services are what? Simultaneous, they are heterogeneous, they are intangible, they are perishable, and now they've added, oh, you can't claim ownership over a service. Then not-for-profit organizations and government organizations. So not-for-profit organizations, and then what? Public sector. How we measure performance in these sectors? We use value for money. Remember, when it comes to the public sector, we use value for money to measure performance. That's the 3 E's also of performance. And also you have to look at the problems in measuring performance in these industries, right? So there's frequent government interference. Because they do not exist to make profit, it is difficult to determine what their basis of performance measurement should be. They have so many objectives, right? These are some of the weaknesses that make it difficult for us to measure performance in a not-for-profit organization and the public sector, right? They have so many objectives. Are you getting it? and sometimes there's frequent government interference. So sometimes these are some of the issues. I get to make sure you know performance. Performance is 20 marks. So far is the biggest area. That one and decision making. But for decision making, I prefer you focus on investment appraisal, because that one at your level it will never be complex. It is always simple. So if you know that this performance, you know the first part. So far, how many marks do we have now? We have 15 plus 20, that is 35. This 35 alone, majority of the questions come from here. Then we move to the next phase, and the third part is also 15 marks, which is management decision making. Now management decision making is actually what we call variance analysis. Okay, standard costing and variance analysis. So this is where we have standard costing and variance analysis. Okay, so this is where we have standard costing and variance analysis. Now for standard costing and variance analysis, first of all, you must start by looking at the concept of standard costing. Okay, know it by heart. Concept of standard costing and standards. Know the type of standards. These are theories which you need to know. From there, you need to look at flex budgets. How to prepare flex budgets. Okay, how to prepare flex budgets or flexible budgets. From here, the next thing you have to look at is basic variance computation, right? So the basic variances. Now people use methods which will make your variance computation so long. Look for good methods and simple approaches to calculate variances, right? Basic variances. Then we have what? Advanced variances. So for advanced variances, ICA doesn't want to confuse students, right? So the only advanced variances that ICA brings is material mix and yield, labor mix and yield. Okay, then sales quantity and mix variances. Okay, these are the only advanced variances that ICA brings. But basic variances, we have the normal computation. Okay, we have the normal computation and we have the work back. Okay, the work back computation. Then advanced variances, we can look at control ratios. Okay, so this is where you are using labor ratios. This is where you use efficiency ratio, capacity ratio, and then production volume ratio or activity ratio. Okay, so these are all the areas you're actually supposed to know. That's why I'm simplifying management accounting for you. Okay, now the question one, I told you I'll break it up for you, so I'll come back to that one. So that one was the contemporary approaches, and I said we break it into three. The first part is intro to man accounting, right? So intro to MA, you need to know the concept of MA, what it involves, right? The concept of MA, which will be the definition of MA: data and information, attributes of good information, the difference between financial accounting, management accounting. You know, those things can pop up. Then planning, controlling, and decision making. Okay, planning, controlling, and decision making. Okay, so these are the areas. Then finally, you need to look at the ethical behavior of management accountants. So this ethics, you are looking at the code of ethics for accountants and mostly the threats. Okay, so at your level, at man accounting level, it's not so deep like you do in FR. Just the code of ethics and the threats to the ethical behavior, and maybe the consequences of an ethical behavior. Then that ends the introduction to management accounting. Now the second part of intro to man accounting will be the contemporary approach, will be the two models of evaluation. Okay, so when it comes to models of evaluation, they are performance matrices, right? But they have been put, this one should have been part of performance measurement, but they have been put as part of costing, meaning it's a good idea. If you go, they may even not be costing. But every diet, there's a question on OAR. Whether you like it or not, you will be calculating OAR in some way or somehow, right? So models of evaluation, they expect you to know. I'll start with the balance scorecard. You have to know the balance scorecard. You have to know the value chain, Porter's value chain. I'm giving you the most important and likely ones mostly. You need to know process total quality management. You need to know continuous improvement, which goes with total quality management. Okay, you need to know benchmarking, competitor benchmarking, and the types of benchmarking. Okay, you need to know business process re-engineering. So TQM, I'll just bring another concept, quality cost. Okay, quality cost are on their own. They can bring you a full calculation on quality cost. Okay, you need to know about cost control. All these techniques are either cost control techniques or they are cost reduction techniques. Okay, so continuous improvement goes with what we call Kaizen. Okay, Kaizen is a term that means continuous improvement in Japanese. Okay, so these are the things that you need to know. When you know these things, trust me, you. So for somebody who say where is throughput, where the rest I put them under costing. Okay, so let me separate it. So the third part of the contemporary approaches will be the costing techniques. Okay, so when it comes to costing, I'm talking about modern costing techniques. So under modern costing techniques, we first start by looking at what absorption costing. Though it's not obvious here, you need to know absorption and marginal costing, because here they will not come straightforward, but they are mixed up in questions. 2, you need to know the high-low method. High-low is part of your syllabus on its own. High-low, every diet high-low will come. High-low is hidden somewhere. You have to find it. Okay, high-low. 3, you need to know ABC, activity-based costing. 4, you need to know throughput accounting. 5, you need to know target costing. 6, you need to know environmental management accounting or environmental costing, which comes with life cycle costing. Somebody will say life cycle costing, oh, it's no longer in the syllabus. Who told you? It's part of the contemporary approaches to management accounting. So these are the costing parts. Let me add one last area, which is relevant costing. Okay, relevant costing. Then you can also add standard costing. Okay, so costing is in your syllabus as costing, just that it was mixed up together with the contemporary approaches part, right? That is why I told you that they didn't arrange the syllabus well. How they arranged it, that's why I've rearranged it for you. So when you are learning, the first part I want you to know is intro to man accounting. What is man accounting? Planning, controlling, and decision making. Then ethics. Then you come and look at the models of evaluation, which are these ones. Then you come and look at costing side, which is the absorption, marginal costing, high-low, ABC, throughput, target costing, EMA, life cycle costing, and relevant cost, right? So the final part of the 65 marks I was given is that's the, was it 4 or 5? Let me see, 3. Okay, 3. So that will be 4. The final part 4 will be investment appraisal. Okay, so when it comes to investment appraisal, there are 2 techniques that man accounting requires you to know. So we have the basic appraisal techniques. When we say basic appraisal, it means that it doesn't consider time value of money. See, the investment appraisal that you see in management accounting is the same thing that applies to those doing strategic case study. It's the same. Just as the strategic case study level, they bring one additional part, which is international investment appraisal. That one is beyond the scope of this syllabus anyway. I get it. But the basic ones do not use time value of money. So no time value of money. Okay, that means there's no discounting. So that one you have payback and you have return on capital employed. Okay, return on capital employed, which is also known as accounting rate of return. These things you have to know them by heart. Okay, because every day they may appear. Then man accounting actually focuses most of the time on MPV, profitability index, IRR, discounted payback. Okay, this is what ICA man accounting always focus on. So if you are going for investment appraisal, always learn these techniques, because these are the techniques that they are going to examine you on. Then the advanced or the discounted cash flow. So we have basic investment appraisal techniques, then we have discounted cash flow technique. Okay, so for discounted cash flows, this is where there is time value of money. So you have to know the concept of time value of money, as well as the process of, are you getting it, investment appraisal or capital budgeting, like idea generation, screening, all that. And also the project assessment of the project, allocation of resources. Just know the process and time value of money. There are three things that make time value of money as it is, right? We are saying that what a CD today is worth more than a CD tomorrow. Why? What are the reasons why a CD today is worth more than one CD tomorrow? Because of three things: inflation, risk, and opportunity cost. Also, so these are the three things. So you should know about them. Then discounted cash flows. This is what I was telling you. You need to know NPV. You need to know IRR. You need to know profitability index. You need to know discounted cash flow. Okay, and these same principles can be applied for asset replacement decisions. Okay, so mostly for asset replacement, you are going to rely on NPV. Okay, so this is management accounting investment appraisal. So this is the 65 marks that I was telling you to look out for. The other areas are just the normal decision making, relevant cost, shutdown, make or buy, and the rest. But then if you want to ace your chances of passing relevant costs, right, or let me say 5A, decision making, short term. Okay, what I just looked at was long term decision making. So for decision making short term, remember I'm teaching you how to crack marks. Here, make sure you know marginal costing techniques. When I say marginal costing techniques, it means that most of the time these ones rather appear. So you are going to either get limiting factor, okay, so limiting factor, or cost volume profit analysis, CVP. If you master these techniques, your chance of passing management accounting will be very high. Okay, so CVP analysis or break-even analysis, these two techniques, trust me, they can be applied everywhere. Before, if you take this from there, that's where you do minimum pricing decisions. So minimum pricing decisions is a bit complex, right? That's why I said don't focus there, because when minimum pricing decisions come, it hurts students, because you waste your time. They'll tell you labor of 2 grades to be required. One is working in another department, he has to be transferred, opportunity cost, but under pressure you will not remember, right? So minimum pricing is where you use the proper relevant cost to work. So our advice, when you see this in exam, you relax, graduate as your last question and pick your easy marks. From there, that is where you start looking at things like the other techniques, right, where you use avoidable cost and relevant cost to take decisions, like make or buy. Make or buy questions are relatively more easier. Okay, they are mostly easier. Then you have shutdown. So mostly with make or buy, you just compare the cost of buying to the cost of making, right? The one which is lower is the one you pick, but it should be relevant cost. Then we have shutdown, where you compare your foregone revenue, your revenue that will be avoided, to the costs that will also be avoided, right? So your foregone revenue versus your foregone cost, to see if there's any extra contribution. Then we have to look at special order decisions, where you are taking a special order. So you compare the relevant cost from the special order to the relevant revenue. So the same thing, the relevant revenue from the special order against the relevant cost from the special order. If it gives you extra revenue or extra contribution, then you should take up the special order. Then we have pricing decisions. So the advantage you have at this level is that the pricing decisions, there's a lot of theory on pricing, right? So read the theory, then it comes to the calculation part. So decision making, short-term decision making is this in management accounting, right? When it comes to budgeting is broad, but if you want to ace your chances of budgeting, learn the theory in budgeting, right? Because budgeting will always come as calculation. it can waste your time. If they bring a long master budget, you have a problem. But that doesn't mean you should ignore it. Make sure your main focus is on the 65 marks I talked about. Then these ones, like the decision making and the budgeting, you play around with them. But make sure you know them very well. But your key focus is the 65 marks, so that when it comes, there's no way you are going to fail. I hope that was very intriguing and interesting. Any question? Any question on management accounting before I move to tax? Any question on management accounting before I move to tax? Any question on management accounting before I move to tax? Actually, some videos, we'll start posting a lot of videos. Our old channel was taken down, so this is a very new channel. We'll start posting more videos. I think there are just few ones on it. We'll be posting more videos on current topics, new topics on tax, accounting, everything on both the ICA syllabus and CIT syllabus. So interested parties can come off into the channel to watch and learn other topics. It will help you a lot. Okay, so now we move. So I was telling you that I'm giving you 65 marks to focus on when it comes to corporate reporting and financial reporting, right? So let me put FR here. Let me put corporate reporting here. So with FR, when you go, I want you to first look at the ratios. Okay, so ratios will come in for 20 marks now. That's why I tell students that focus, make sure you master ratios so that you can crack these 20 marks. Let's go to 2. I think I have the syllabus here, so we can walk there and then capture what we want, right? So that okay, so we have ethical and regulatory framework 10 marks. We have standards 25. Single entity financial statements 20. We have business combination 25 and ratios 25, right? So we have 20, 25, 20. That's 65. 65, right? Then regulatory framework 10. That's how many marks? 75. Okay. Now where was I? Okay. So ratios 20. Ethics and the conceptual framework. How many marks was that? 10 marks, right? Okay. 3. We have consolidation. Making how many marks? 25 marks. Then, how many marks is this? This is 55, right? Now, look here. When it comes to the standards, there are some that you can crack, right? And at least get 10 marks from there. For published accounts, when we add this, how many marks do we have? (30 plus 35) 65 marks. For the standards, there are some that you can basically do. Those that are theory, those that are like PPE, and those ones you easily understand, they will always be there. So this is the chance to crack this 65, right? Other areas that you can look at is when the standards come fully. Then other areas that you can look at is this published account. Ask me why I didn't talk about published account. Ask me why I didn't talk about published account. Because published account, no matter what happens, I told you any area I don't bring as part of my 65 is so. You are just going to pick and make your marks, right? So when it comes to published account, we know the marks there is what? It's 20 marks. Then standards. The rest of the standards are what? 15. When you put it, you have your rest of the 35 marks, which you can focus on. This one, you just go and pick your marks. But this is where you have your full focus. Okay, to crack 10 from standards. Console there, you can do everything. Console is very easy actually, if you have the right guidance. Ethics, you can always get 100 over 100 there. Ratios to at least 18 if you have the right way to do it well. Are we okay? So this should be your full focus. That is for FR. Now, when it comes to corporate reporting, the same way, ratios will still be 20 marks. When we come to ethics, still, I think for corporate reporting, ethics is 5. Anna, it's still 10. Yes, still 10 marks. Then you have console. Here, console is still 25 marks. Then you have specialized reporting. Which is 15 marks. Now, how many marks do we have here? That is 20, 10, 30. Then 30 plus 40. 70. Is it 70 marks? I think this is 70, right? $70 marks. But if you at least can crack some 10 from here, you are good to go, right? So this is 70 marks. So this 70 marks, the other areas, which no matter what you do, you have to pick your marks here. Okay, are the standards, because the standards here can be quite complex. Okay, so here the standards, we know standards will be 30 marks. So standards alone are 30 marks here. So what you can do to ace your chances is that standards, you can pick the ones you are comfortable with. Okay, so the comfortable ones, and deal with them, so that your main studies will be based around these 70 marks. You will learn hard. If you are able to learn hard, trust me, you go to corporate reporting, it's the standards that overwhelm students. I will tell you the gospel truth. Those who have taken the paper before, if you can attest to this, kindly say yes or no, that it is not standards which is killing you in corporate reporting. It is standards and console. Yes or no? Post it in the chat column for us. Yes or no? Is it not standards and console which are killing people? Yes or no? Before I move to tax. Yes or no? Okay. Yes, it is the truth. So if you focus on this, trust me, there's no way, unless you yourself you are not serious, there's no way you are going to fail corporate reporting, because the standards, you will learn them all right, but you will tilt your attention towards these areas that I've put down. Okay, when you are able to do that, it will help you a lot, because still you can't do console without the standards. You by all means learn some of the standards, and the standards that you learnt in FR, master them, because those standards, they appear but they add a little bit of advanced concepts to them, so it will help you a lot. I hope that is okay. Can I move from my screen now, and let's start with taxation? So I'm going to talk about principles of tax, and then I'll talk about advanced taxation. Any question before I move to taxation? Any question before I move to taxation? Any question before I move to taxation? Yes. Michael is saying that you can master the standard, but there's no guarantee that you can solve a question under it. Yes, that is why you must know the principles. Every standard, you know, and one thing I forgot, anytime there's a standard, even if they've not asked you for an extract, provide an extract, right? Because it shows presentation. Now, every standard, you can all agree with me, apart from the scope and objective of the standard, we have the definitions in the standard or the terms you need to know, the recognition criteria, the measurement, the disclosure, and the presentation. So, if you are doing standards and you even know when they involve some calculations, you have to say, see the extracts below, right? And give extracts of the calculation you've done, how it will look like on the financial statement. Then your chance of passing FR and corporate reporting will be easy. I hope this is something that you keep at the back of your head because it's going to help a lot. I hope that is fair. Can we move? So let's look at principles of taxation first. Then I move to advanced taxation. So principles of taxation, I am going to break it this way. Okay. The first part of the syllabus will be the tax system in Ghana. Okay, tax system in Ghana. And under tax system in Ghana, I'm going to first talk about, or the first part you need to know is taxation. Intro to what taxation is. Intro to taxation in Ghana. So, and the history of taxation. I think the history of taxation can come as a whole question. Explain the history of taxation or discuss the history of taxation in Ghana. So what are taxes, the types of taxes in Ghana, indirect taxes, direct taxes, classification by approach, and also income tax, expenditure and consumption tax. You have to know progressive taxes, regressive taxes, proportional taxes, you know, how taxes are graded in Ghana, the characteristics of a good tax system, right? So this is where you look at it. Then the next part has to do with fiscal policy. Okay, so we all know, let me just take this simple time to explain fiscal policy. Fiscal policy is actually people don't seem to understand what fiscal policy means, right? Now, in simple terms, fiscal policy is how the government controls the economy, right, or stabilizes the economy by using two things. Okay, so government will use taxes, or government will use what public expenditure to what control the public. And you know that public expenditure is an expense and taxes are income for the government. So government is just using its income and expenditure to control the economy. How does he do that? So fiscal policy is when government uses its income and expenditure, which are the taxes and public expenditure, to control the economy. How does he do that? That's what I'm coming to say. Now, it depends on the state of the economy, right? So if I should do this, you can see that sometimes this economy, what is it doing? Is it booming or is in recession? This economy is booming, it's doing well, right? You can see this economy is doing well, it's rising. And this economy too is falling, it is in recession, right? Now, what the government does is that when the economy is booming, that means there's so much money in people's hands, right? So the economy will be rising. So what government does is that he tries to bring it down to a stable level. And this is a stable level, right? This is the stable economy. So the economy must always be stable. Otherwise, inflation will happen. Government has four main objectives, right? To make sure that there's good employment for everybody, inflation is low, there's balance of payment, and there's economic growth, right? Every government has these four objectives. So we don't want an economy which is so much booming. If it's booming, it can lead to inflation. So government has to control that. Do you get the whole concept? So we are saying that, okay, if the economy is in recession, is booming or is stable, we want to maintain stability. So when it's increasing, government has to bring it to this level. So when money is in plenty people's hand, what do? You must increase taxes, right? And decrease public expenditure so that people can do it themselves, right? So anytime government tries to what? Increase taxes and reduce public expenditure, that means the economy is booming. When the economy is booming, government must bring it to a stable level. That is what we call a contractionary fiscal policy. Now, fiscal policies are of two types. It is either the government, okay, fiscal policy is of two types. It's either the government wants to do it himself, which we call a discretionary fiscal policy. Okay, so a discretionary policy is made up of two types. This is where I was saying that we have what? The contractionary fiscal policy, where the economy is booming. Okay, contractionary fiscal policy, which is where what? The economy is booming, and when the economy is not booming, then you have to expand it, right? Then we have what we call the expansionary fiscal policy. Okay, so fiscal policy overall can be discretionary, by the discretion of government or by the action of government. You see, when the economy is booming, he increases taxes and reduces public expenditure. But when the economy is not doing well, then government will rather what? Reduce taxes and increase public expenditure to increase the economy to what? A stable level. So that is what we call expanding the economy, by investing more in projects, by incurring more public expenditure to bring the economy back to a stable position. So these are what we call the two discretionary fiscal policies, and there are tools that we use in fiscal policy, and that is another part of your syllabus, those doing principles of taxation. So things like public debt is a whole thing. Are you getting it? It's a whole course. You have to know public debt, the budget, right? You need to know what a budget surplus is, a budget deficit is, a balanced budget. So these are tools that we use to control fiscal policy, because remember that the budget is the proposed what? The estimated revenue and proposed expenditure of a state over a period. So you see that the taxes are estimated revenue and public expenditure is what? The proposed expenditure. So the tools for fiscal policy, public debt, and then taxes, you should know them, right? So this is the basics about public fiscal policy. Now there's another side of fiscal policy, which is a type of fiscal policy. We call it what? Automatic stabilizer. Okay, so we have discretionary fiscal policy, which is these two: contractionary, which government takes from the economy, and expansionary, which government injects into the economy, right, by either increasing or decreasing taxes and public expenditure. Discretionary fiscal policy is automatic. That one, government does not do anything. It happens by itself, right? So you all agree that if what? Wages and if taxes increase in the system, then employment income reduces. Do you understand? And employment goes down. So some things controlled by themselves. When we know when imports, what do we call it? Import duties increase, then infant industries will be doing well, because multinationals cannot come into our country easily. You get it? So some things, it's like they are automatic. When this one happens, he has another side which balances of the economy, right? So that one, government does not come in. It happens automatically. That's why we call it automatic stabilizer. It stabilizes the economy automatically. So the discretionary ones, government has to come in, right? And the automatic ones, no discretion. Government doesn't come in. I hope that is clear. So that is fiscal policy. I hope we've all understood fiscal policy into detail, and we would make time to look at public debt and other tools for fiscal policy. Okay, so that's the first part. Now, apart from that, you need to know the role of GRA. When I say the role of GRA, you need to know the divisions of GRA. That's the GRA Act, who the Commissioner General, mostly the Commissioner General's role. Are you getting it? His responsibilities or his powers that can be delegated, and the one that cannot be delegated, and the administration of the authority. Then apart from that, now there's been a restructuring at GRA, right? There's been a new restructure. Please, it's a new thing. Make sure you know, because now it is not like what we used to have, small taxpayer and the rest. Now we have both the small taxpayers and the medium taxpayers have what? A taxpayer service center. Are you getting it? So please know these restructures. It is going to help you. And the basic taxes, we've talked about all that, the importance of taxation, all that, those things are part of this first part. Then the second part of the syllabus now comes to imposition of income taxes. So when I say imposition of income taxes, this is where I want you to look at let's say the exemptions, deductions, and reliefs under the law. Okay, so here, what are you supposed to know at your level? Here you are supposed to know, one, the allowable deductions in the law. Okay, you have to know the allowable deductions in the law. You have to know the exemptions under section 7, which we call exempt income. Okay, we know that we are using the Income Tax Act, so please when I'm mentioning section. So here section, we mean section, let me just start from section 8 down to 17. You need to use the residual deduction rule. Exempt income, you need section 7, okay, and a bit of other parts of the law. I don't want to go into details. Now the third part is to know what we call the industry concessions. At your level, it's not so deep, but this is found in the SIT schedule, right? The SIT schedule. So this is one part of your syllabus, and this thing, when you master it, you can do literally every question around business income. Okay, because these are the things you'll be using in business income. The third part should focus on the individuals. Okay, so individual taxation. Now individual taxation, at your level you have three things: employment income. So employment income mostly comes on its own, so let me just take that one out and separate it, but it's part of individual taxation. So employment income will be separate from this individual taxation here. So this individual taxation I'm talking about is a sole proprietor. Okay, so know about how to compute taxes for a sole proprietorship using the principles of deduction I've stated above. So sole proprietorship, and here you have the tax stamp. Okay, the tax stamp and other things, the basic things, right, of computing individuals' income. So when we move from here, then we come to partnership taxation. It's also part of individual taxation. Under no circumstance will you get the two at the same time. You get one. So in Ghana and other countries, partnerships are not taxed. We tax the individuals running the partnership. Okay, so let me just put it here. Partnership taxation is part of individual taxation. Okay, so know it. Then from there, the fourth part will be business or corporate income tax, corporate tax liabilities, or let me just call it company tax. So even at the principles of taxation level, you don't go into detail, right? You just learn just merchandise companies, okay, or you do trading and merchandise companies and manufacturing. You don't go into banking and insurance and petroleum, and no, you just focus on these ones, right? So when it comes to corporate tax, you need the principles of tax for companies, scope of company tax. Scope of company tax. So when it comes to scope of company tax, you need to know taxation of shareholders, just the basics of taxation of shareholders. Under section, the scope is under section 58. Then you need section 59 on taxation of shareholders. Then some exemptions for companies. Okay, some exemptions and reliefs for companies, which these reliefs I told you here, these are the same reliefs that apply to individuals and companies. And trust me, all these areas I'm mentioning are all 20. Now when you come to the last one I'll talk about, okay, I'll talk about the last two. This one will be the fifth part, which is what? Employment income. Okay, employment income. Now employment income, you need to know about employment itself. You need bonus and overtime. Okay, mostly they like bringing a bonus and overtime. You need to know how to deal with casuals. You need to know how to deal with part-time employees. You need to know how to deal with temporary employees. Okay, temporary employees. But with employment income, a full-blown calculation will be given to you most of the time. Okay, but it will not be very difficult. So that is it. Then when we move on, the next part will be, what is it? Is it 6 or 7? Yes, 6. So the sixth area will be gifts and realization. Okay, so we are dealing with taxable gift and realization of assets. So you just need to know the value of taxable gift, how to determine the value of taxable gifts. Now in the Income Tax Act, it doesn't really talk about gift tax, but every tax law has transitional provisions, meaning that when you're moving from one tax law to the other, you can visit that. Assuming maybe I want to determine the value of taxable gifts, it's not in the Income Tax Act, right? So I can visit transitional provisions to still apply what was in the old law in this law. But apart from that, it's not, this law is not like before. Now if the gift comes from employment, it will be treated as an employment gift. If it comes from investment, it will be treated as an investment gift. If it comes from business, it will be treated as business gift. But however, for investment gift, there's a caveat. Under the first schedule, it tells us that if you have an investment gift, you have the option as an individual, not a company, an individual, to tax that investment gift at 15% separately, or to add it to your assessable income. Are we okay? So that is for gifts. So we have the value of taxable gifts. Then we have computation. Okay, so that's for gifts. Computation of gift taxes. Now, then when it comes from there, we have realization. And for realization, we are talking about what was previously known as capital gains tax. Okay, capital gains tax. Now it's realization. Now this one is very broad, but your level is not so detailed. Here you'll be dealing mostly with capital assets. Capital assets. Mostly either you'll be dealing with land, you'll be dealing with a building, you'll be dealing with shares. Okay, so this is how far they go. But there's another aspect of realization that you have to also look at. You see, though it's in your syllabus, they don't often examine it. So we have something called changes in ownership. Okay, make sure you look at it. I'll give you the section. So this one's, let me say, you look at section 35 down to, let me say, 50. Okay, all these ones are still applicable in your exam. Then changes in ownership, it's actually section 62, but you can still look at section 47. That is the opposite of this one. So this one leads to this. Okay, so this is it. Then the final part of your syllabus talks about indirect taxes. Talks about indirect taxes. Indirect taxes, and here the focus so far has been on value added tax, but then customs is still there, and excise duties. But then the examiner has so far focused so much on VAT, so make sure that you know VAT a lot. But when it comes to custom, just know the computation. They are going to ask you basic questions on maybe what is duty drawback, the types of drawback, are you getting it, and excise duty. So this is about principles of taxation. If you've realized, I didn't give you any area to focus on, right? But just as a formality, let me help you. Okay, so when you come here, you see the role of the GRA and those things, right? The theory with the fiscal policy. Those areas, if you put all of them together, I can give you a solid 25. Together with the gift and then the capital gains, they are mostly not difficult. Now, corporate tax, if it's 20, individual 20, employment 20, why don't you focus on those ones? And VAT is 15, together with withholding taxes. Sorry. Withholding taxes is the last one. Withholding tax is not difficult at all. It's the easiest part of your syllabus, but it can be confusing if you don't read. Withholding tax administration comes for 15 marks. Now, what if you add this one? This is also 15. VAT can be a little complex though, but at your level it's not that difficult. So you have indirect taxes 15, withholding taxes 15, 30. This one's, I think, is 5 marks, right? But when you add it to the beginning ones, the role of GRA and those things, you can get a solid 25 mark from there. But when you come to individual 20, corporate tax 20, employment 20, that's solid 60. So why don't you master these exemptions, relief, individual taxation, corporate tax, and employment income? That alone gives you a solid way. Then you add your withholding tax and VAT to it. You are good to go. I hope that is fair. Can we look at advanced taxation? Can we look at advanced taxation now, or you have a question for me? Can we look at advanced taxation now, or you have a question for me? Hello? Can we look at advanced taxation now? Just post yes, let me know so that I can start. Now, when it comes to advanced tax, I'm going to break it into areas just like I did. So the first part I will start with is introduction to tax planning. So this one is actually an important area. So we first start with introduction to tax planning. Okay, so this is where you look at what tax planning is. You look at tax avoidance versus tax evasion schemes. Are we okay? Then from there you come and look at constraints to tax planning. Okay, that's the intro to tax planning part. Then the next part will have to do with what I call domestic tax planning. Okay, so your paper is actually broken into two phases. We have domestic tax planning, and then we have international tax planning, right? International tax planning, and then V, intro to tax planning, domestic tax planning, international tax planning. Then we have specialized areas. Then finally we have communication to clients. Sorry, with the principles, tax administration is there. It's part of the first part. Please don't forget. It's part of the first part of the role of GRA. It includes tax administration. So communication to clients and GRA. Okay, this is what we call tax administration. It's also here. Okay, so I've broken it into 5 areas. Now, what goes into these 5 areas? Let's first start with 1. Intro to tax planning. What do you need to know? Intro to tax planning. What do you need to know? 1, you need to know definition and objectives of tax planning. 2, you need to know about tax evasion versus tax avoidance and their schemes. 3, you need to know the constraints of tax planning. 4, you need to know what we call anti-avoidance provisions. Okay, so the second part, which is the domestic tax planning, actually starts with this anti-avoidance provision. So I should have started with that one, but I will start with the incentives. So this is where you look at the reliefs, the exemptions, the concessions, and the deductions. Okay, so everything concerned about reliefs. So the reliefs under the law, all those things. So the deductions, allowable deductions from section, let's say section 9 down to section 17, the principles, and section 130, which talks about excluded and domestic expenditure. You need to know the industry concessions, that the state schedule. You see, this same thing was under principles of tax. You also need to know the exempt incomes, right? Exempt income under section 7. Then other tax rates, okay, the industry tax rates. Okay, there's one thing I forgot here. We call it the maxims of tax planning. That should be the 5. It's part of the introduction. Maxims or variables of tax planning. Sister Kate, okay? So why late? Late. We have the locational variable, activity variable, time variable, and entity variable. Then we have the industry concessions, industry tax rates, okay? the minimum tax rate or the minimal tax rate, all this one we can find them in the first schedule, okay, of the Income Tax Act. Capital allowance and all that is still here, okay. That's the part that covers domestic tax planning. Now we move to 3, which talks about international tax planning, okay. International tax planning. So for international tax planning, we are going to first look at 1, double taxation and its related issues. Then double taxation agreements, okay. These are the things you need to know. Then entitlement to treaty benefits. You need to know how to be entitled to benefits under a double taxation agreement. Entitlement to treaty benefits. Then you need to know relief from double taxation. Relief from double taxation, which we call foreign tax credits. So this one you can see it under section 112 and section 111 subsection 2 and 3. Okay, so then you know the advantages and disadvantages of DTAs. Every diet, whether you like it or not, something will come from this area. Then once you have been able to do this, the next part is dealing with residents, okay. The next part is dealing with residents and non-residents, okay. I should say residents, non-residents, and dual resident. When somebody is resident in 2 or more states, okay. Then we come to the principles of permanent establishment, okay. Permanent establishment are very likely every diet. So this is where you are mostly looking at branch, okay. So branches, workshops, and other things that non-residents have opened in Ghana. So section 107 down to section 110. Make sure you look at it. Very important. Then we have section 60 for branch profit tax. Branch profit tax, very important. So after all this, then the final part of international tax planning, which will be transfer pricing, okay. Transfer pricing, which also comes with anti-avoidance provision. So refer to the transfer pricing regulations LI 2412 and then section 31, which talks about transfer pricing. So this is international tax planning. Now the 4th area will be specialized taxation or taxation of specialized industries. So here we first start with computation of taxes, okay. Computation of taxes for all businesses. So when it comes to all businesses here, now they've decided to take off. Before there was insurance and banking, they've taken it out. So here for any merchandise business, you may be given the normal employment, not employment, mostly they will not bring employment, but business taxation, where you are going to compute somebody's income. So for a merchandise or trading business, right, or manufacturing business, then you need to know how to deal with trusts, okay, and compute taxes for trust. Then exempt entities. So when we say exempt entities, we mostly mean charities, charitable organizations. So charitable organizations or NGOs, okay, that's what we call charitable organizations. Then from there you need to know about the principles of petroleum taxation, then minerals and mining. Okay, then the final part of your syllabus is the communication part, professional communication. So when it comes to communication, you are looking at what? How you communicate with the tax authorities, communication with the tax authorities. So system for filing returns, assessments, raising objections, the normal communications you do with GRA most of the time, practice notes, private rulings, the normal tax administration. Then from there, that is where you look at tax ethics. Okay, so the ethical principles that the confidentiality, objectivity, they are still there. Then finally, how to prepare professional communication. So things like memos, reports, advice, presentation, briefing notes, letters, they are all there. So every question will sort of require you to present your final answer in this sort of document. So I think that brings us to the end of our walkthrough for this session. The next session, I'm going to talk purely about strategic case study. If you have any question, the forum is open, the live chat is open. You can ask all your questions. I'm going to unfortunately, I didn't go through audits and other courses. If you want a syllabus walkthrough on that, maybe another time I'll do it. Because if I'm to cover all the subjects, we would land somewhere around 11 and I'll have a bad sour throat. So this is just the little I could offer, but I'll do strategic case study right after this. Yes, please. The room is open for questions before I go off. The room is open for questions before I go off. Okay, so if there are no questions, then off we go.